these countries aren't stupid. I mean, they can see what you and I can see, which is that the money is being debased. Worldwide money is being debased, and they probably are, to some degree, the calculation, they're making a bet in their head that says, okay, it's being debased. And not only is it being debased, but it would be one thing if it was being debased, but the trend was going to go away and it was going to get better and it wasn't going to always be debased. But the problem is it's actually being debased and the debasement's getting worse. So what I think they're saying is, we could see where this is going and it's not good. There could be a monetary reset at some point in the future. And we're going to make the bet that the people who have gold are going to have a better place at that table in terms of the monetary reset versus those people who don't have gold.
The recent trend of de-dollarization in global financial markets, which has been a prominent topic for nearly 2 years and has supported gold prices at record highs, may not be as significant as initially perceived. According to a research report from the Federal Reserve Bank of New York, the decline in global U.S. dollar assets held by central banks, a 7% decrease between 2015 and 2021, does not indicate a mass movement away from the dollar. Contrasting this perspective, LawrenceLepard of Equity Management Associates contends that countries are increasingly wary of global monetary debasement and are turning to gold to secure their financial futures. He argues that gold will offer a stronger position in a potential future monetary reset as monetary debasement continues. This sentiment is reflected in the People's Bank of China's gold purchasing activities over the past 18 months, which have coincided with Beijing reducing its official holdings of U.S. Treasury bonds. Specifically, China's holdings of U.S. Treasuries have decreased by $18.6 billion, bringing their total to $797.7 billion. Similarly, the United Kingdom's holdings have declined by approximately $200 million, totaling $753.5 billion. Lepard asserts that many countries are gradually recognizing the diminishing value of the U.S. dollar. This is partly evidenced by the long-term trend of decreasing foreign holdings of U.S. Treasury bonds since 2014. Such a trend suggests that nations seek more stable assets to preserve their wealth. In terms of gold reserves, the United States leads with over 8,000 metric tons, nearly equal to the combined reserves of the following 3 largest holders: Germany, Italy, and France, which have 3,355 metric tons, 2,452 metric tons, and 2,437 metric tons of gold, respectively. Lepard criticizes countries like Canada for not maintaining any gold reserves, which starkly contrasts with the substantial reserves held by the U.S. However, the accuracy of the U.S. gold holdings is sometimes questioned due to the need for more recent audits. Join us as we delve into LawrenceLepard's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
What all these other countries are saying is, you know what, they're sitting at the poker table and say, we're going to call you. We'll put in our chips. We call. Let's see what you got in terms of cards. And the fact is that what we're seeing, I think, take place is a gradual awareness and transition from the fact that the U.S. dollar is not as good as it once was, and so that if you have excess earnings or savings in your country, you don't want to store them in treasury bonds. Of course, net U.S. treasury bonds held overseas have been declining since 2014. So this is a long-term trend. But you'd much rather save in something that you know is going to appreciate in value. And so gold and silver, make the most sense. I mean, most big, the countries, very few countries have made the jump to Bitcoin. I mean, El Salvador did. It's a dinky country. I think there's some big countries in the Middle East that are doing it on the QT. I think Russia might even be doing it on the QT. I don't know. But the traditional go-to neutral reserve asset is gold. I mean, you've got 5,000 years of history. Everybody knows what it is. And these countries aren't stupid. I mean, they can see what you and I can see, which is that the money is being debased. Worldwide money is being debased, and they probably are, to some degree, the calculation, they're making a bet in their head that says, okay, it's being debased. And not only is it being debased, but it would be one thing if it was being debased, but the trend was going to go away and it was going to get better and it wasn't going to always be debased. I mean, that, okay, fine, you had some inflation, but you fixed it. But the problem is it's actually being debased and the debasement's getting worse. And so what I think they're saying is, we could see where this is going and it's not good. And there could be a monetary reset at some point in the future, and we're going to make the bet that the people who have gold are going to have a better place at that table in terms of the monetary reset versus those people who don't have gold. And, but some countries are incredibly stupid about it. I mean, you look at Canada. Canada's, I mean, at least the United States theoretically owns 261 million ounces of gold. I mean, I think there's some debate about that because Fort Knox hasn't been audited for a long time. But, Canada doesn't even own any gold. I mean, it's crazy. Before Bitcoin was invented, gold was the best choice, without a doubt. The people who own gold and the people who own Bitcoin tend to be actually very, very much aligned on what's wrong with the world's monetary system, right? I mean, it's that I mean, you could, I mean, like I take a Peter Schiff who hates Bitcoin, but his analysis of the problem and the monetary debasement issue, the government spending, all of it. I mean, we see things absolutely, positively eye to eye. Now, with respect to the two assets and comparing them, they're different. Okay. One has a much longer track record, much longer history. It's physically present. It doesn't require any energy after it's been mined. I mean, it's just a brick and it sits there. The Bitcoin network requires constant energy to operate, but there's no real blockchain in gold, right? I mean, if I hand you a piece of gold, nobody knows that I did that, and there's no record of it, and it's totally private. Whereas in the Bitcoin world, everything you do is there's a record of a movement. Now, the movements are anonymous because the code, the addresses are anonymous, but nevertheless, there still is a record there.
Investors often fear the US dollar losing its status as the world's foremost currency, a concern that intensifies during geopolitical strife. Following the 2022 invasion of Ukraine and the subsequent G7 sanctions on Russia, speculation arose about countries reducing their reliance on the dollar. Despite these fears, a rapid decrease in dollar usage is unlikely. Even if the dollar's dominance gradually declines, it may not significantly impact the US economy or stock market as many assume. LawrenceLepard emphasizes that the US dollar's status as the world's primary reserve currency means that other currencies will too if they falter. Before a total collapse of fiat currencies, he predicts very high and persistent inflation, akin to the double-digit rates in some South American countries. Recent economic data provide mixed signals for the Federal Reserve. In April, US inflation remained steady while consumer spending weakened. These trends need more clarity on whether the central bank can begin cutting interest rates in September. The data suggests that the elevated price increases could persist longer than expected, though tepid consumer spending might temper price rises in the coming months. Lepard suggests that actual inflation may be higher than reported, predicting rates could reach 12 to 15%, leading to public outcry and potentially prompting monetary reform before a total fiat collapse. Let's get back to the interview.
The dollar still is the major reserve currency in the world, and Brent Johnson and his dollar milkshake theory is not entirely wrong. I mean, if the dollar has trouble, all currencies will be having trouble. The dollar may arguably could have trouble last. There are two sides to that argument, but what you described, fiat apocalypse. I mean, that's several steps down the road. I think that between here and fiat failure, which is kind of what I think apocalypse would equate to, we're talking about just very high inflation, very high and persistent inflation. Kind of think about South American countries like Argentina or Brazil that or other countries that have just had double digit inflation. Not the last cycle 9% was the top, right? In stated. I mean, it's and that's the other thing. Of course, we haven't even got into the fact that, and I mentioned it earlier, but the numbers aren't accurate, right? And we all know that they're lying about the numbers. I mean, if you look at like a shadow government statistics, calculation of inflation, it's much higher. But the point is that I think what's going to happen is I think we're going to have much higher inflation, like 12, 13, 14, 15%. And at that point in time, the screaming is going to get very loud from the US population. And arguably, there'll be some kind of a monetary reset or a restructuring or reform of some sort that will lead to a fix of this before all fiat completely fails. I mean, I think there's some possibility that they won't reform it and that it'll just kind of continue to grow worse, and ultimately, Gresham's law will take over, and fiat will, more or less become worthless. I think that is a possibility. And I'm not trying to be hyperbolic. I'm not trying to scare people. I'm not rooting for hyperinflation because it'd be a terrible, terrible event. But it's not, if you look at how this country being the United States, has behaved with respect to its monetary and fiscal policies, And if you look at the things we're doing and you look at our debt to GDP, um, all of these characteristics, when they have been exhibited in other smaller countries, admittedly not the world's reserve currency, admittedly not the world's leading military country, have led to massive devaluations of the currency and or hyperinflation. So, to blindly think, well, the U.S. can get away with doing the exact same things that in all these other countries have led to high inflation and hyperinflation and not have any impact, I think it's folly. I mean, there's just no way that we're not going to have an impact. The question is how bad does the impact get, and then the question is how do the policymakers respond? I mean, the one thing, I mean, I manage a fund that's focused on gold, silver miners and Bitcoin. And the one thing I say to anybody who's looking to invest in my fund is, because if they're smart, they'll say, well, how does this go wrong? How do we lose money here, Larry? What do you worry about? And I tell them, and of course they laugh at this response. I say, well, look, if the U.S. government were to suddenly get really responsible, and stop sending money overseas and close all our military bases and cut back our military budget by 50% and means test Social Security and means test Medicare and, cut all unnecessary spending and quote unquote balance the budget. If our government were to do that, then, what I'm describing in terms of the debt, and so forth, I mean, it would be less of a problem. I mean, there would be potentially there'd be a way to work our way out of it. I mean, we did have this much debt to GDP coming out of World War II. And they used financial repression, yield curve control to manage that. Different demographics. I mean, you had all the GIs coming back. You had the growth of the automobile, interstate highway system, appliances, houses, all of it. So what happened in that period is we actually grew out of the debt that we had. The debt to GDP was very high and problematic, but by, repressing the bond market and the underlying growth in the economy got us out of that problem.
Given the ongoing global monetary trends, such as the rise in gold purchases by central banks like the People's Bank of China, the reduction in holdings of U.S. Treasury bonds, and the persistent inflation challenges in the United States, how do you perceive the future of the U.S. dollar's dominance as the world's reserve currency? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.